Imagine walking into a bank, asking for a personal loan, and not once being asked about your credit score. Sounds almost too good to be true, right? But here's the twist. While no credit check loans can be a lifeline, they can also be a financial trap. The difference between the two comes down to one thing, and I'll reveal exactly what that is before we wrap up. Number one, what a no credit check personal loan really means. A no credit check personal loan is exactly what it sounds like. The lender does not pull your credit report from the major credit bureaus to decide whether you qualify. Instead, they might look at your income, employment history, or bank statements. Think of it like renting a car without the company checking your driving record. They care more about whether you have money for the deposit today than what happened last year. For example, if you earn $2,500 a month and have a steady job, a lender might approve you even if you missed several payments in the past. Number two, why people choose no credit check loans. Some borrowers go this route because their credit score is low and they keep getting denied elsewhere. Others need money urgently. Maybe the car broke down, the rent is due, or a medical bill just landed in the mailbox. I once spoke to a man who needed $800 for emergency dental work. His credit score was 520, so the bank said no. A no credit check lender gave him the money in 24 hours. Number three, the hidden cost you cannot ignore. Here's the part many people do not realize until it's too late. No credit check loans often come with sky-high interest rates, sometimes 100% or more annually. Imagine borrowing $1,000 and having to pay back $2,000 in just a few months. That's the reality for many payday or installment loans in this category. It's like using a bucket to bail water from a sinking boat, but the bucket has holes. Number four, types of no credit check loans you might see. Not all no credit check loans are the same. Payday loans are small, short-term loans, often due in 2 weeks. They're quick, but can be brutal if you cannot repay on time. Installment loans let you borrow more money and pay it back over months or years, but the interest can still be high. Title loans use your car as collateral. If you do not repay, you could lose your vehicle. For example, someone might take a $3,000 title loan and end up paying $6,000 after interest and fees and still risk losing the car. Number five, how lenders decide without a credit check. If they are not looking at your credit score, what are they looking at? Your income is the big one. Lenders want to see you make enough money to cover the payments. They may also check your bank account to see if you have regular deposits. Some even require proof of employment or a co-signer. It's like a chef skipping the recipe book but still tasting the ingredients to see if the dish will work. Number six, the risk to your financial health. It's easy to think, I'll just borrow this once and pay it back quickly. But if you are already stretched thin, that payment can feel like a mountain. Miss one due date, and late fees pile up. The debt can spiral fast. I have seen people take a $500 loan and, after rolling it over multiple times, owe more than $2,000. Number seven, how to spot a scam. Some shady lenders prey on people in desperate situations. Red flags include no physical address, no customer reviews, or demanding upfront fees before sending the loan. A friend of mine almost wired $150 as a processing fee before realizing the lender's phone number didn't even work. If it feels off, it probably is. Number eight, legitimate lenders for no credit check loans. Yes, there are reputable companies offering these loans. Some credit unions and online lenders will skip the credit pull but still operate within state lending laws. You might also find community-based lenders or peer-to-peer platforms that approve based on income and history with the platform. For example, some credit unions offer small emergency loans capped at 18% annual interest, much better than a payday lender's 400%. Number nine, alternatives that can save you money. Before jumping into a no credit check loan, consider a few other options: a credit builder loan from a credit union, a paycheck advance from your employer, borrowing from friends or family with clear repayment terms. Even selling and used items online can be faster and cheaper than paying 100% interest. I knew a woman who sold 2 old smartphones and a bike she never used. She got $450 in one day without owing a dime to a lender. Number 10, how to use a no credit check loan wisely. If you decide this is your best option, borrow only what you need, not the maximum offered. Have a repayment plan before you sign anything. Understand the total cost, not just the monthly payment. If you borrow $600 at 30% interest over 6 months, know exactly how much you'll pay back in total. Think of it like planning a road trip. You need to know the distance, the gas cost, and the tolls before you hit the road. Number 11. The one thing that makes or breaks your loan experience. Here's the key I mentioned earlier. The outcome of a no-credit check loan depends less on the lender and more on how you manage it. If you have a clear plan and discipline, it can be a bridge over troubled water. If you treat it like free money, it can become an anchor that drags you down. Your mindset is the deciding factor. Number 12. State laws can protect or hurt you. Every state in the USA has its own rules about interest rates, loan amounts, and repayment terms for no-credit check loans. In some states, payday lending is completely banned because of its high cost nature. In others, lenders can legally charge interest rates so high they can double or triple the amount you owe in months. For example, in Texas, a short-term loan might have fees that make the annual percentage rate over 500%, while in New York, that same loan would be illegal. Number 13. Some loans still report to credit bureaus, even if the lender does not. Check your credit to approve you. They might report your repayment history after you take the loan. This means paying on time could help you slowly rebuild your credit score, but it also means missing payments could damage your credit even further. For example, an online installment loan company may not pull your credit to approve you, but if you default, the negative mark could stay on your report for 7 years. Number 14. Watch out for automatic withdrawals. Many no-credit check lenders require access to your bank account so they can automatically take payments on the due date. While this can help you avoid missing payments, it can also lead to overdraft fees if the money is not there. I have seen borrowers get hit with a $35 overdraft fee 3 times in 1 week because the lender kept trying to collect. Number 15. Your repayment schedule matters. Some loans have weekly or bi-weekly payments instead of monthly ones. That might sound easier, but smaller, frequent payments can add up and make it harder to manage your budget. For example, paying $100 every Friday feels smaller than $400 once a month. But if you have other bills due at the same time, it can be overwhelming. Number 16. Collateral is not always worth the risk. Some no-credit check lenders ask for collateral, like your car, jewelry, or electronics. While this can increase your chances of approval, losing that asset can hurt more than the original problem you were trying to solve. Imagine borrowing $1,500 against your car and then losing it because you missed 2 payments. Now you have no transportation to get to work. Number 17. Shorter terms can be more expensive. It might seem smart to choose a short repayment term to get out of debt faster. But with high-interest loans, the payment can become unmanageable. This often forces borrowers to refinance or roll over the loan, adding even more fees. For example, a $1,000 loan with a 1-month term at 20% interest might sound simple, but if you cannot pay it, you could end up owing $1,400 after multiple rollovers. Number 18. Some lenders offer early payoff discounts. A few reputable no-credit check lenders will reduce your interest if you pay the loan off early. This can save you a significant amount of money if you have the funds before the due date. For instance, a lender might waive the last 2 months of interest if you clear the balance halfway through the term. Number 19. Check for extra fees besides interest. Some loans have origination fees, late fees, and even processing fees that can increase the real cost dramatically. For example, you might agree to a 20% interest loan, but later discover a $100 administration fee added to your balance on day 1. Always read the fine print before signing. A no-credit check loan can be a lifeline in the right hands, or a trap in the wrong ones. If you needed money urgently, would you take one of these loans or look for another way?